Hey, it's Angela Snyder with Taxanista, and I'm here to talk to you about a money miracle in a money minute. So, today's topic is whether you should become an S-Corp. This is a super important topic, so I'm going to actually just sit down here and talk to you as if you're sitting in front of me at my office. All right, here we go, guys. Hey, I am your host, Angela Snyder, and you are listening to the Taxanista podcast, where we help entrepreneurs just like you scale their businesses from scarcity to prosperity. First thing I want to know is if you have an LLC. If you don't have an LLC already created, you need to get one. That's the first thing you need to do in order to move your business on the path of growth, especially when your income is growing. So, we're going to be talking about two different instruments today. Number one is an LLC. An LLC is something you get registered within a state. There's a big misconception about this, and that misconception is that where you register your business is how you're taxed. That's not the case. So, for instance, I'll have clients that will come to me and they'll say, hey, I just got my business registered in Nevada, or maybe I should register my business in Wyoming or in Texas. And I'm like, well, why? Who told you that? Who made that recommendation? Because there's definitely good legal reasons for that, but there's not always good tax reasons, because you're taxed where you do the work. So let's say you're a speaker and you go traveling around and you speak, in California, and you speak in Washington, and you speak in Florida, and you speak in New York. If the 1099s you get have the state designation on the bottom, then technically you have to file in those states. And also technically you're supposed to file in all the states where you are present and earn the income. Okay? So an LLC is a limited liability company. There's technically no such thing as a federal limited liability tax return. So what I'll always ask you is, okay, are you an S-Corp? And if you say yes, then I'm going to say, how are you taxed? And that's when I get the deer in the headlights look. So what I'm meaning is, if you created an LLC and you didn't do anything different, then you could be what's called a disregarded entity. And what that basically means is that you'll file a Schedule C on your personal return for your business activity. Now, if you formed an LLC with an unrelated party, then by default, without any election required, you're going to be considered a partnership. Another option, which is what we're really here to talk about today, is S-Corporation status. It's for small business corporation status. It's considered a flow-through entity. A flow-through entity is where the entity itself gathers and organizes all of the income and expenses, but it's passed through or flown through to the owners on the form of a K-1. So a partnership and an S-Corp are considered flow-through entities. That is, the business itself will not pay income tax. The income or loss will flow through to the individual owners, and they will report that on their own individual tax returns. So an S-Corporation can be very advantageous for a growing business, because when you make S-election status at a top level, you're required to run payroll. So you've got two components of your income out of an S-Corporation. You have wages, which comes to you in the form of a W-2, and that has the Social Security and Medicare tax on it, which is 15.3% for both the employer, which is your business, and the employee, which is you. You also get a K-1, which is somewhat like a 1099, okay? It's not really, but it's the other document you get to report your income if you're an S-Corporation. That income escapes the Social Security and Medicare tax. That's why people are so anxious to create S-Corporation returns, or businesses, to be taxed that way. That is why so many small businesses that are getting started are so interested in forming an S-Corporation. Some of the rules of an S corporation are that you are required to form and file payroll on a reasonable basis and on a reasonable salary. So that way you cannot avoid the self-employment tax on all of the S corporation income. As an example, and again, this is just an example I'm using for illustrative purposes. Let's say, for instance, the business netted $80,000. Then what could happen is you could do a wage at $40,000 and a K-1 at also $40,000 to make up the total of the $80,000. The initial $40,000 that you're going to run on a W-2 for payroll will have the Social Security and Medicare tax applied. So you will have 15.3% tax on that plus income tax. On the other $40K that's going to come through as a draw or distribution that will come to you and be reported on a K-1 will not have the Social Security and Medicare tax applied. In this specific example, you would save over $6,000 in self-employment tax. Income tax is exactly the same, no difference there at all. But definitely something to consider. There is no right or wrong way in which to elect the S corporation status. I personally like to wait until a business has made some income and it's cost beneficial for the business owner. Otherwise, the only person that really makes out usually is the accountant, like myself. For instance, let's say you created an LLC and we put you into an S-Corp right away, but you hadn't started to earn any income yet. In that instance, we would still be required to run payroll as a condition of the S-Corp status, and we would have to file an S corporation tax return. There would be very little benefit to you, but the additional filing fees that the accountant would collect. That is why I like to say, once your business is netting about $40,000 to $50,000, that's the time we need to start having those conversations to determine when the best time is. I'm going to backtrack and say that it's always a great time to get your LLC formed as soon as possible, because if we elect S corporation status, we have noticed that the IRS will go on the state site and look to see when your LLC was created. It's only happened once, but that's all it takes. So in this past instance where we had a client create their LLC in the middle of the year, we went in and elected retroactive S corporation status back to January 1st. Yes, it's possible. And yes, there are hoops we have to jump through, but it is possible. So if you're listening to this and it's beyond the end of March, then it is possible. Don't believe just hearing that it's not an option if you don't do it in the first quarter. However, in this instance, we requested election status back to 1/1, but were only granted back to S election status as of the first day their LLC was accepted within the state. So that can happen, which is more of a reason why, if you don't have your LLC established yet, to get it going and get it established as soon as possible. Now, some of the other requirements are that you've got your payroll, you have, which you have to do, you're considered an employee, and then you also have a separate S corporation tax return. The S corporation tax return is due 1 month prior to the normal business return. So it is due on March 15th, and an extension would need to be filed if you can't make that time. The extended due date pushes it out until September 15th. It is crucial that you make sure that you meet those deadlines, because the penalty for failing to file by the extended due date is $195 or $200 per shareholder per month. So if there's 2 of you, then it's $400 a month essentially. And it does not end. So it's super important that you make sure that you have adequate records and you file on time. Something also to keep in mind is with an S corporation, you are required. Something to also keep in mind is with an S corporation, you are required to report a balance sheet if your income, your gross income, is greater than $250,000. More than likely, if you're in an S corporation status, your gross income will be above the $250,000. Thus, if you have to report a balance sheet, now's the time to go ahead and get your accounting software started. So if you're not currently utilizing anything, now's a great time to get going. We personally recommend Xero, Xero, for bookkeeping and accounting software. There are lots of other options out there, assuming the most well-known one out there, which is QuickBooks. We currently will only support that if you come to us with it. We don't actually start or keep your books on QuickBooks. We find other software to be a little bit more user-friendly and a little bit more intuitive and more with the current technology. Another cool thing when you are an S-Corp is something to keep in mind. You're already running payroll because you're required to. Do you have any young children? Do you have any children that are helping you out? It's a great idea to get them employed through your business. Instead, get them enjoying your business, learning your business, but also getting paid through your business. It's both a tax benefit to you and to them. There are certain things to consider when doing this, so don't just jump in right away. For instance, are they a little bit older, about ready to graduate high school? Are they going to need student loans? Something to keep in mind there before you go ahead and hire them. However, they do have earned income at this point, and you could start them off with a Roth IRA. Definitely something to keep in mind and to consider and talk to your financial advisor about. We strongly support S corporations. In fact, the majority of our business is based on small businesses with either S corporations or partnerships. So we are an excellent source of information and guidance for anything you might need or questions during this process. We understand it can be very confusing, especially the payroll part. I know it's strange thinking that you're your own employee, but you are when you have a business. Again, key things to keep in mind as an S-Corp is the S corporation never files and pays income tax. The only tax the S corporation will pay in your instance will be payroll tax. If your business is netting at least 40 to 50K and you have one individual involved in your LLC, it's probably time to chat. For each additional member of your LLC, then the net income would need to rise in order to determine the best time for us to chat. Once we do chat, it's super simple. We determine the state you're located in and the state it's best to get organized in. Once we do that, then we make the election with the IRS for you to be taxed as an S corporation. Once we make that election, after many weeks, maybe months, you will get a letter back from the IRS that says, congratulations, we've approved your S election status as of XYZ date. It is super important that we get a copy of that letter that you received back from the IRS so that we can put it in your permanent file and also make sure that the correct date that we requested was accepted. In the unfortunate circumstance that the date we requested was not accepted, then we have a couple of options. One of the options is to either accept it, and then you would have what's considered a short year. So the first half of the year would either be as a disregarded entity, which is a Schedule C, or a partnership if you have a unrelated partner. And then the second half would be as your newly formed S corporation. It's not a problem, it's just not ideal. I went over a lot of quick facts, hoping to give you an overview and understanding of the general requirements and when you might want to elect S corporation status with the federal government. If you should have any questions or want further information, please just reach out, or you could also check out at our website at the information listed below. Always remember, you can reach us at Taxanista.com or 1-833-TAXANISTA. Thank you and have a great day.